Good morning. Welcome to a Monday, and Market Day Report is on the air. I'm Tony. Thanks for allowing us to get your week started, well, and starting it with you. So thank you for that. All right, let's check how markets will start the week and the overnight trade action. We'll start with the corn market in the red as the old crop slipped 2.5, new crop down 2 3/4, 4.25 a bushel, and that again was the overnight action. Soybeans will start the day in the red as the November settled overnight down 7 at 10.28 3/4. This is a market that's been higher 3 straight sessions. Wheat market overnight higher, September 5.48 3/4, up 2.5. Hard red overnight was up 3 at 5.32 a bushel, and overnight action for Minneapolis mixed. Cotton market back in the red, 47 lower, 68.21. All right, well, what can we expect this week? President, Midwest Market Solutions, is Brian Hoops. Brian, what will you watch this week?
Hey, good morning, Tony. Well, there's not much as far as reports go. Of course, our export inspections this morning, then crop progress this afternoon, export sales on Thursday. And as far as the grains go, that's about it. There's not a lot that's going to give us direction, at least from the reports. So we're back to trade and weather, maybe a little bit of outside news, which for the wheat market, a little friendly as some Russia agencies have downgraded the size of the Russian winter wheat harvest. So that's given a little support to the wheat market in here. A lack of farmers selling also contributing to it. And then you look at what's driving corn and beans, and it's certainly the weather. On Thursday, Friday, we traded hot and dry conditions. We talked about last week that we were trading some very hot temperatures, and we went and filled, or at least partially filled, those gaps. But then we started to turn back lower here after filling the gaps last night, and forecasts look much cooler as we go out into early part of August.
Hey, Brian, let's kind of stick for just a moment on a wheat story. And let's start first with the Chicago wheat. The front month or most active is September. We've got the 6-month view here. Thoughts on wheat? Because, again, anytime we're talking wheat, we think Ukraine, we think Russia. Thoughts here?
You know, we used to be one of the biggest ports of origin for the world's needs 15 years ago, and since that time frame, we're about 9 or 10. So there's a lot of influence on what happens with Russia and the Ukraine and their exports. So if their crop sizes are diminished, they can't export as much product. That kind of opens the door for some other countries, including the United States, to fill some of that wheat business. From clients I've talked with, they've had a huge yield this year, and initially they sold a lot of crop, but it was last year's crop as they swept out the bins to make room for this new harvest, and now the door is slammed shut. They're really not interested in selling anything at this price level. Now, if you look out into the deferred contracts, there's a large carry being offered, and they will be encouraged to sell that carry, especially if we get some sort of a little bit of a rally, get prices back above some profitable levels. I think a lot of selling should take place or will take place on the deferred contracts.
All right, Brian, hang on. We'll come back in a moment. We'll talk about cash cattle, live cattle, feeder cattle market, what's happening there. It's all ahead. Market Day Report continues in a moment. Just looking at cash cattle that wrapped up last week, 230 to 232 in the south, in the north, 240 to 241. So now where do we go this week? Well, live cattle futures finished off the session on Friday in the red. It's actually 2 sessions lower now in the red. Live cattle, August on Friday, 223.30 off 37, and then you see the 219s after that. So maybe a bit of skepticism that cash prices will continue to move higher. What about feeders? Feeders lost $1.42 on Friday, 323.57. 323.70 on that September, $1.72 lower. And then the hog trade, hogs have been higher 3 straight sessions. August at 106.50, up 67. Let's go back to Springfield, Missouri. Brian Hoops. Brian, cash cattle last week kind of did finally develop there at the end of the week, 230, 232 in the south. Thoughts on cash and how that could affect live cattle?
So yeah, cash markets a little better than expected. We were steady for the most part in the north, higher as you mentioned in the southern plains. So you look at where August is trading at, we're too much of a discount. Really, we need to narrow that spread up here during the last couple of weeks here of July as we go into August and the delivery period. So we have time to do that, but that's going to be the lead contract as far as if we move higher, it's going to be led by August. If we trade lower, that's the one that should not have much downside risk. And we did trade lower on Friday, but it felt like more of a profit-taking session as we really narrowed those losses by the end of the session. We saw triple-digit losses. That's when the buying interest came into the cattle market. Now, packer margins are deeply in the red. We lost over $12 in choice cutouts last week and almost $15 in the select. That's hurting packer margins. They're now estimated about $193 in the red. And at some point, they're going to have to correct that. So it could be this week or next week. They slow the kill speeds, try and pop up the box beef. That will give them a little bit of a margin back that they can work with, but that means slowing the cash down, a little softer demand for the cattle. Coming up this week, a lot of reports for the proteins. Cattle on feed report coming out Friday at 2 o'clock. Semi-annual cattle inventory report comes out simultaneously 2 o'clock this Friday. In 2024, USDA did away with this report. Now they're bringing it back, and that will be this Friday. And then the cold storage report comes out at 2 o'clock on Friday as well.
All right. Now, speaking of storage, we keep up with how we store our energy. So whether we're talking West Texas Intermediate or we're talking nat gas, obviously our storage levels have an effect on the price. But what's happening right now with crude?
Yeah, kind of crazy market. Crude had rallied very sharply into resistance on Friday and then failed by the end of the session. Now we're seeing just very minimal losses here this morning in that crude, but certainly looks like a lot of resistance above this market, much higher prices in that September contract. Natural gas kind of following the same pattern as crude, failed on Friday, then it actually gap lower Sunday night. So, if you're thinking that we're going to use more nat gas because of this heat stretch that's coming, I think the futures market dialed that in last week with some strong gains. And then as the temperatures moderate going into August, natural gas giving a lot of those gains back in early dealing Sunday night and into this morning.
Yeah, and gasoline moving lower here in early morning trade, and diesel prices are moving higher. Brian Hoops is president, Midwest Market Solutions. Tammy, that's how we start your Monday.